All right, so we're diving into the world of Indian electronics today.
Fascinating stuff.
Yeah, you've handed us a whole stack of reports and news.
All about Dixon Technologies.
Exactly, Dixon Technologies.
And honestly, the numbers are pretty eye-popping.
Yeah?
Like they're jumping off the page.
Really interesting company.
It is.
Because they're this major player in the Indian market.
Yeah.
But they're kind of like the silent force.
Yeah, they're the brand behind the brands.
Behind so many popular brands that we all know for electronics.
Yeah.
They manufacture for companies all over the globe.
Yeah.
But their roots are firmly planted in India. And we're looking at their latest quarterly and 9-month performance.
Yes.
Based on these unaudited reports that you've given us.
Absolutely, yeah.
So let's start with the third quarter.
Okay, so Q3.
Their revenue is up a massive 117% year on year.
Huge jump.
We're talking 10,461 crores.
Right.
Or about $1.27 billion USD.
To put it in perspective.
Yeah, for context.
Yeah.
That's a significant jump.
It is.
But looking beyond just the top-line revenue,
yeah,
I'm curious about the profit margins.
Sure.
What factors contribute to this? And are there any potential challenges on the horizon?
That's a great question.
When we see numbers this big,
yeah,
we've got to think about how sustainable is this?
Absolutely, yeah.
What's driving this?
So their profit after tax, PAT, for the quarter, is also up an incredible 124% year on year.
Wow.
Reaching 217 crores.
Okay.
But there's a note here.
Uh-oh.
About an exceptional item.
An exceptional item?
Yes.
What is that all about?
Well, it turns out there's a one-time gain of 20,961 lakh included in that PAT figure.
All right.
And this stems from Dixon selling part of their stake in a joint venture.
I see.
So it's not all organic growth.
Right.
And it does inflate the reported profit a bit.
So how should we interpret their profitability then?
Well, the expert notes we have provide an adjusted PAT figure, which excludes that one-time gain.
Right. So they're giving us both the raw number and then
the adjusted number.
The one that kind of takes out that
one-timer.
Special item.
Exactly.
Okay.
And it's still an impressive increase.
Okay.
But it's important to keep that distinction in mind.
Right.
You know, for a clear picture.
It's all about transparency.
It is.
You want to see how they're really doing.
Absolutely.
So even with that adjustment, they're still seeing really strong profit growth.
Yeah.
Now let's zoom out a little bit and look at their 9-month performance.
All right, 9 months.
What's the story there?
Over the 9 months, revenue is up by 119%.
Wow.
Which is remarkable.
It's still huge.
Reaching 28,577 crores.
Okay.
And even after we adjust for that one-time gain, the 9-month PAT is still more than double the previous year.
Okay, so really strong growth across the board. Right. Really impressive. What's driving this performance? And is it consistent across all of their product segments?
Right, that's a good question.
Because when we see a company doing this well, we want to know, is it just one thing?
Yeah.
Or is it everything they're doing?
Right.
Are they firing on all cylinders?
Right. And to understand that, we need to look at the different segments of their business.
Okay.
They're not a one-trick pony.
Got it.
They have multiple divisions.
Okay.
Each with its own story.
So Dixon isn't just this one big entity.
It's not.
They've got these different divisions, each telling its own story.
Exactly.
Okay, so tell me more about these different segments.
All right. So their powerhouse is the mobile and EMS segment.
Mobile and EMS.
Yes.
What does that stand for?
Electronic Manufacturing Services.
Okay.
And it brings in a massive 67% of their Q3 revenue.
Wow. That's the majority of their revenue for the quarter.
Yeah. And a whopping 84% of the revenue for the first 9 months.
Okay. So that's
huge.
The bulk of their business.
It is.
It comes from mobile and EMS.
Yeah, and this segment encompasses everything from mobile phones and hearables to wearables and telecom equipment.
So really all the mobile stuff that we think about today.
Okay. It even includes revenue from their subsidiary, Ismartu.
Okay.
So it's a big piece of the pie.
So essentially mobile phones and related electronics are driving a huge chunk of their success.
They are.
What about their other segments?
Sure.
I see some interesting data points here.
Yeah.
About consumer electronics and appliances?
So their consumer electronics and appliances division, which includes things like LED TVs and refrigerators, actually saw revenue dip by 8% over the 9 months.
A decline.
By a decline.
In such a big market is kind of intriguing.
It is.
What factors could be contributing to this dip?
Yeah, that's a really good question.
Is it increased competition?
It could be.
A shift in consumer preferences?
It could be that too.
Or perhaps something else entirely?
It's probably a combination of factors.
Okay.
One possibility is increased competition from Chinese brands
Okay, yeah.
in the Indian market.
Makes sense.
Another factor might be changing consumer preferences, perhaps towards smart home technologies,
Right. Yeah.
That integrate appliances in a different way.
Right. So maybe they're not buying the standard refrigerator as much.
Exactly.
That's something more.
Smart.
Yeah, the
Internet-connected appliances.
Mm-hmm.
Okay, that's interesting.
It is.
It definitely raises some questions about the dynamics of that market.
For sure.
What about their other segments,
Okay.
like home appliances and lighting?
Yeah.
Are there any noteworthy trends there?
There are a couple of interesting points.
Okay.
So the home appliances segment actually saw a 12% revenue increase over the 9 months.
Okay, so they're up in that segment.
They are
driven primarily by strong sales of fully automatic washing machines.
All right, so people
want those fancy washing machines.
They want to upgrade their washing machines.
They do.
Okay.
This suggests that they're responding well to evolving consumer demands within specific categories.
So it seems like they're strategically positioning themselves.
They are.
Within those categories to take advantage of that growth.
Exactly.
Now, stepping back from the segment breakdown, I'm curious about their overall financial health.
Sure.
What does the picture look like there?
So, from what we see in the reports, Dixon is in a remarkably strong financial position.
Okay, good.
Their debt levels are low.
Right.
They have substantial cash reserves.
Excellent.
And they've been investing heavily in expanding their manufacturing capacity.
So are those strategic investments in capacity expansion likely a major driver of their growth?
I think it's a logical conclusion. It seems like their expansion strategy is paying off, positioning them to capitalize on India's growing manufacturing sector.
Right, because India's becoming a manufacturing hub.
Absolutely.
And it seems like Dixon is right there.
Right in the thick of it.
At the forefront of that growth.
Exactly.
But earlier we talked about that one-time gain. That impacted their reported profits.
Right.
How does that factor into assessing their overall financial health?
That's a valid point. Yeah. While the overall picture looks promising, it's crucial to understand the underlying drivers of their profitability.
Oh.
Is this level of performance sustainable in the long run?
It's like watching those cooking shows where they create an incredible dish effortlessly.
Yeah.
But, there's a team of skilled chefs behind the scenes making it all happen.
Right.
And we need to kind of peek behind the curtain.
Yes.
And see what's really cooking in Dixon's kitchen.
I love that analogy.
Okay, got it.
And one way to do that is to delve deeper into their most successful division.
Okay.
Mobile and EMS.
Okay, back to mobile and EMS.
Back to it.
All right.
Because it's not just about their impressive revenue.
Right.
They've achieved a remarkable 82% return on capital employed, ROCE.
Hold on, remind me what ROCE means.
Of course.
It's one of those financial terms that always slips my mind.
So ROCE is a measure of how efficiently a company uses its capital to generate profits.
Got it.
A higher ROCE generally indicates they're doing a great job managing their investments and turning them into returns.
So the higher the ROCE, the better.
The better they are at using their money.
Using their money wisely.
Exactly.
To make more money.
To make more money.
Okay. So 82%.
82%.
Suggests that they're exceptionally skilled.
Yes.
At utilizing their resources.
Within that division.
Within the mobile and EMS division. That's a positive sign for investors, right?
Absolutely.
Okay.
It points towards astute decision-making and effective resource allocation within that key segment.
You mentioned earlier that the mobile and EMS division includes more than just mobile phones.
I did.
Can you elaborate on what else is in that division?
Yes. So the mobile and EMS division encompasses a diverse range of products, including hearables and wearables, telecom equipment, and even revenue from their subsidiary is Smart2.
So
it's well diversified.
It's a pretty diverse portfolio within that one division.
Within that one division.
That might explain why they're able to achieve such high ROCE.
It could.
They're not putting all their eggs in one basket?
Exactly. Diversification can definitely contribute to stability and resilience, even within a high-growth sector, like mobile technology.
So we've seen booming revenue.
We have.
Impressive profitability, a powerhouse division with great returns on investment.
Yeah.
It almost sounds too good to be true.
It does sound that way.
Are there any areas of concern or potential red flags that we should be aware of?
The decline in the consumer electronics and appliances division is worth noting.
Yeah.
It's a significant market, and an 8% revenue drop suggests they're facing challenges they need to address.
Okay. I'm also curious about the other expenses category.
Okay.
In their expenditure analysis, it appears to have decreased significantly as a percentage of revenue.
It has.
Both for the quarter and for the 9 months. Is this a positive development?
It certainly suggests they've improved cost management.
Okay, so they're being more efficient with their spending.
Yeah.
But could that also mean that they're cutting corners?
That's the question, isn't it?
Yeah.
To fully understand the implications, we'd need to dig deeper.
Yeah.
You know.
Into the specifics.
Yeah. Are they cutting corners that could impact quality in the long term? Or have they found genuine efficiencies?
Yeah.
It's hard to say.
It's hard to say.
From this high-level view, more detailed financial statements would be helpful.
Okay. What about their debt levels? You mentioned they were low.
They are.
Which is generally a good sign.
It is.
Especially with interest rates on the rise globally.
Right.
What does that look like?
Their debt-to-equity ratio is a healthy 0.15x as of December 31st, 2024.
Okay.
And what's even more impressive is that their net debt-to-equity ratio is just 0.06x.
Wow.
This means they have more cash on hand than debt.
So they're in a really
good position. Right.
Which gives them a lot of flexibility.
Significant financial flexibility.
Okay, so they're not burdened by excessive debt.
No.
And they have the resources to invest in their growth. That sounds like a really advantageous position to be in.
It definitely does.
Especially in today's economy, where things are
a little uncertain.
Yeah. Globally.
Right.
Speaking of economic storms.
Sure.
Are there any external factors on the horizon that could potentially impact Dixon's future performance?
That's an essential question.
Yeah.
While their current performance is outstanding, it's important to remember that no company operates in isolation.
Right.
Global economic conditions.
Right.
Potential supply chain disruptions, geopolitical tensions, even shifts in consumer demand.
All of these things are outside their control.
They are, and yet they could.
They have a big impact.
Have a significant impact on their business.
And their future.
It's a reminder that past performance doesn't guarantee future results.
Exactly.
But based on what we've seen so far, Dixon appears to be well-equipped.
They seem to be.
To navigate those challenges.
Yeah.
They've got a diverse portfolio, strong financials, and a clear focus on growth.
And they're deeply rooted in a market
Yes.
with tremendous potential.
Huge potential.
India's manufacturing sector is poised for continued growth.
It is.
Driven by government initiatives and a burgeoning middle class.
Exactly.
Before we move on,
are
there any other details in these reports
Let me see.
that stand out to you? Anything we haven't discussed yet?
I found their employee stock option plan quite interesting. They've granted 15,000 stock options to employees, subsidiaries, and joint venture companies.
Why is that particularly interesting? Isn't that kind of standard practice?
It is common.
Yeah.
But the specifics of the plan can provide insights into their company culture and their approach to talent retention, for instance.
Yeah.
The fact that these options vest over 3 years suggests a long-term commitment to both the company and its employees.
So they're trying to keep people around.
They are, by giving them
a stake in the company.
A stake in the company.
Exactly. It aligns everyone's interests.
Interesting.
Yeah.
So it's not just about the numbers.
It's not?
It's about understanding.
It's about the why.
The why.
Behind the numbers.
The underlying strategies.
Yes.
The values that shape those numbers.
It's the story.
It is a story.
Yeah.
Okay.
And for someone who enjoys delving into the details, those nuances often reveal the most compelling aspects of the story.
Absolutely. We've covered a lot of ground here.
We have.
From headline figures to segment breakdowns.
Yes.
From financial health to potential risks and opportunities.
For sure.
What would you say are the key takeaways for our listeners so far?
If we connect this to the bigger picture,
Yeah.
Dixon Technologies stands as a compelling example of India's emergence as a global manufacturing force.
They're not simply assembling products.
Right.
They're innovating, expanding their reach, and creating value in a dynamic market.
So what does all of this mean for our listener?
Right.
Someone who wants to understand not just the what, but the so what.
The so what
of these results.
So firstly, Dixon's performance is a testament to the potential of the Indian market. Particularly in electronics manufacturing.
Right.
This isn't a fleeting trend. It's a force to be reckoned with.
Yeah, India's demographics, government policies, expanding middle class.
All pointing in the right direction.
All signal continued growth in this sector.
It's a good place to be.
Okay, what else?
Secondly, Dixon's strategic decisions. Like their capacity expansion, portfolio diversification, focused approach to key segments are worth studying. They're not simply reacting to market conditions. They're proactively shaping their future.
It's a reminder that even in a rapidly changing industry like electronics,
it is.
Smart strategies, effective execution make all the difference.
Absolutely.
What else?
And finally, it's crucial to remember that headlines don't tell the whole story.
Right.
Always dig deeper. Understand the nuances of financial performance. And consider the broader context.
Like we did with the exceptional item.
Exactly.
You can't just take the numbers at face value. You've got to understand.
Got to dig a little deeper.
Where they're coming from.
Absolutely.
What's behind them. Okay, so that's what separates.
That's what separates.
Informed decision-making from following the hype.
Exactly.
All right, I'm ready for the final thought. What's that one provocative idea?
All right. Here's something to consider. While Dixon is currently thriving, the global landscape is constantly evolving. Geopolitical factors, supply chain vulnerabilities.
The ever-present possibility of disruption from new technologies.
It's a lot to keep track of.
It is.
All these things are out there.
They are.
That could come along and change the game.
Absolutely.
So the question becomes, how sustainable is this remarkable growth? And what strategic moves will Dixon need to make? Not just to stay ahead of the curve, but to potentially redefine the curve.
Redefine it.
In the years to come.
That's the million-dollar question.
It is.
And it's one that goes beyond just this quarter's results. It speaks to the larger dynamics of innovation, competition, and the future of global manufacturing.
And that's something worth exploring for anyone who wants to understand the forces shaping our world.
Absolutely.
And on that note, we'll leave our listener to their own continued exploration of Dixon's story and the exciting world of Indian manufacturing.
A fascinating world.
Thanks for joining us on this deep dive. It's been a pleasure. It really is a fascinating case study.
It is.
And digging deeper into the specifics of their financials. One thing that stands out is their cash flow.
Cash flow. That's always a good indicator of a company's financial health, right?
Absolutely.
So what's the story there with Dixon?
Their cash flow from operations is particularly strong. It's gone up significantly in the first 9 months of this fiscal year. Compared to the same period last year.
So they're generating a lot of cash.
They are.
From their core business activities?
Yes.
What are they doing with all that cash?
That's the important question.
Are they just sitting on a pile of rupees? Or are they reinvesting it back into the business?
Well, they're definitely not just hoarding cash.
Good.
You can see from their capital expenditure that they're putting a good chunk of that cash flow back into the business. Primarily to fuel their expansion plans.
That makes sense. Given their focus on boosting manufacturing capacity.
Exactly.
But, sometimes companies get so caught up in chasing growth that they neglect other important aspects of their business.
It's easy to get tunnel vision.
Exactly.
When you're growing that fast.
Are they striking a good balance?
That's a perceptive observation.
Yeah.
It's easy to get blinded by shiny growth numbers.
Right.
But a truly sustainable business needs to look beyond the immediate bottom line.
Absolutely.
And from what we can see, Dixon seems to be taking a balanced approach.
Okay, good.
They're investing in R&D,
okay,
as evidenced by their new product launches,
right,
and technology partnerships.
So they're not just resting on their laurels.
No, they're innovating.
They're looking to the future.
They are.
Okay.
And they've also highlighted their commitment to sustainability
Right.
and ethical sourcing in their reports.
So they're thinking about the bigger picture.
They are.
The long-term impacts.
Absolutely.
Of their business.
Yes.
Okay, that's good to hear.
Yeah, it's encouraging.
Now let's shift gears a bit.
All right.
And talk about the competitive landscape.
Sure.
Dixon is clearly doing well, but what about the other players in the Indian electronics manufacturing space?
Right.
Are they facing any significant competition?
The Indian electronics market is definitely heating up.
Okay.
With both domestic and international players.
Okay.
Buying for a piece of the pie.
So it's a crowded market.
It's becoming increasingly crowded.
Okay.
Dixon's biggest competition likely comes from other large Indian electronics manufacturers.
All right, so homegrown competition.
Yeah.
As well as from Chinese companies.
Right.
That are increasingly expanding their presence in India. So it's a global game.
It is a global game.
How is Dixon positioning themselves?
That's the key question.
Stand out from the crowd and maintain their competitive edge.
Well, they seem to be focusing on a few key strategies.
Okay, what are those?
First, they're leveraging their deep understanding of the Indian market.
All right, so they know the local market.
They do.
They know what Indian consumers want.
They know the consumer preferences.
Right.
And they're using that to tailor their product offerings.
Right.
And their distribution channels.
Okay, so they're really playing to their strengths there.
They are.
What else?
Second, they're building strong partnerships with global brands, becoming the go-to manufacturing partner for many big names in the electronics world.
So they're playing on both sides.
They are.
They've got the local knowledge and they've got these global connections.
Global partnerships.
Okay.
And finally, they're investing heavily in technology and automation to enhance their efficiency and keep costs competitive.
So they're staying ahead of the curve.
They are.
In terms of technology.
Trying to.
Okay.
Trying to.
It's a combination.
It's a combination
of local expertise.
Yes.
Global partnerships and technological prowess.
Yeah.
That sounds like a potent recipe for success.
It does.
In this industry.
In a very competitive industry.
Now, circling back to their financial performance.
Okay.
I'm curious about their profitability margins.
Sure.
We've already discussed their impressive revenue growth and ROCE.
Right.
But how do their profit margins compare to industry benchmarks?
That's a good question.
Are they squeezing every rupee out of their operations?
Right.
Or is there room for improvement?
Well, their operating profit margins are actually quite healthy.
All right.
And in line with industry averages.
Okay, so they're not
outliers.
They're not the top of the pack?
No.
But they're doing well.
But they're consistently profitable.
Okay.
Which is a good sign.
That's what you want to see.
It is.
Consistency.
Right. Yeah.
It's not always about maximizing profits at the expense of...
At the expense of everything else.
Growth or market share.
Yeah.
It's about finding that balance.
Absolutely.
A balanced approach.
It's about the long game.
Yeah, to profitability often leads to more sustainable success in the long run.
I completely agree.
Speaking of the future, we've touched on some potential risks like global economic headwinds and competition.
Right.
Are there any other challenges or uncertainties on the horizon?
One factor to consider is the regulatory landscape.
Okay, yeah. That's always a big one.
It is.
For companies operating in...
Especially in India.
Yeah.
Where the government is actively promoting domestic manufacturing.
Okay.
Through various policies and incentives.
So those policies could change.
They could.
That could impact...
That could impact Dixon.
Their business.
Yeah, their operations and profitability.
So it's a bit of a...
It's a double-edged sword.
Yeah.
Government policies.
They can help you.
They can.
But they can also hurt you.
They can definitely hurt you.
If they change...
If they change unexpectedly.
How adaptable is Dixon to these potential regulatory changes?
From what we can gather, they seem to be quite agile and responsive to policy shifts.
So they're not just sitting back.
They're not passive.
And waiting to see what happens?
No, they're proactive.
Okay.
They've demonstrated a willingness to adapt their strategies and operations in the past to align with changing regulations.
So they're used to dealing with this?
They are.
Okay.
They also have a strong government relations team.
Okay.
That keeps them informed.
All right, so they're plugged in.
They're plugged in.
With the tapping in.
To the government.
In the government.
Okay. And helps them navigate the regulatory landscape effectively.
So they're not just passively riding the policy wave, they're actively engaging with the government and positioning themselves to thrive within that evolving policy framework.
Yeah, it's a smart approach.
Now, before we wrap up our deep dive into Dixon's world, is there anything else in these reports or news articles
Let me think.
that piqued your interest?
Yes, actually.
Okay, what is it?
There was a mention of Dixon's growing interest in the electric vehicle EV market.
Interesting.
They're exploring opportunities to manufacture components for EVs.
So they're looking beyond
their current business.
Beyond their core, which is a rapidly growing segment in India.
The EV market is a hot space.
It is.
Right now, globally.
Yeah.
Governments all over the world
push for it.
Are pushing for cleaner transportation solutions. What are Dixon's specific plans in this area?
The details are still emerging, but they've indicated that they're looking at manufacturing a range of EV components.
Okay, like what?
Including batteries, charging stations, and perhaps even entire powertrains. Wow, so they're not just dipping their toes in the water.
They're diving in head first.
Yeah, they're going all in.
They seem to be.
On EVs.
It's a big bet.
This could be a significant growth driver.
It could be huge.
For them in the coming years.
Especially given the projected boom in EV adoption in India.
It's a huge market.
It is.
With a lot of potential.
Huge potential.
If they can leverage their existing manufacturing expertise. And partnerships.
And those global partnerships. To establish a strong foothold in the EV market.
It could really pay off.
It could be a game changer.
All right. We've covered a lot of ground here.
We have.
From cash flow and competitive dynamics. To regulatory landscapes and emerging opportunities in the EV space.
A lot to unpack.
It's been a fascinating journey through the world of Dixon Technologies.
It has been.
As we approach the end of our deep dive,
okay,
what are your final thoughts on this company and its prospects?
Overall, I'd say Dixon Technologies is a company with a compelling story. And a bright future.
All right, so you're bullish on Dixon.
I am.
But even the most successful companies can stumble.
They can.
If they don't adapt to changing market conditions.
Right.
Or if they make strategic missteps.
It happens all the time.
Yeah.
Nobody's perfect.
What are some potential pitfalls?
Okay, so one potential pitfall is becoming overly reliant on a few key customers or product segments.
So they need to diversify.
They need to diversify.
Their customer base and product portfolio.
It's all about managing risk.
Putting all their eggs in one basket could leave them vulnerable.
Absolutely.
If things change.
If the market shifts.
Yeah.
Or if a key customer decides to go in a different direction.
That's a good point.
It's something to watch out for.
Another challenge is managing their rapid growth effectively.
Right. Growth can be a challenge in itself.
Yeah.
As they expand their operations and workforce.
Yeah.
They need to make sure they maintain their quality standards.
Okay.
Operational efficiency. And strong corporate culture.
Right. Because those things can get lost.
They can.
In the shuffle.
Yeah. In the rush to grow.
How do you see Dixon addressing these potential challenges?
Well, they seem to be taking a proactive approach.
Okay, good.
They're investing in robust systems and processes to manage their growing operations.
Okay, so they're thinking ahead.
They're thinking about the infrastructure.
Yeah.
They need to support that growth.
Okay.
And they're actively recruiting and developing talent to support their expansion plans.
So they're not just focused on the top line growth.
Yep.
They're also laying the groundwork
Yeah.
for sustainable and scalable success.
They're building a solid foundation.
That's a reassuring sign.
It is.
For anyone looking at Dixon as a potential investment or business partner.
Absolutely.
Now, before we move on to our final takeaways, I want to touch on something like we haven't really discussed yet.
Okay.
Which is Dixon's impact on India itself.
Right. Beyond the numbers.
Beyond the financial metrics.
The social impact.
Yeah. How is their growth contributing?
Yeah. That's an important question.
To the social and economic fabric of the country.
Well, there are several positive contributions to highlight.
I'm all ears.
Okay, so first and foremost, they're creating jobs.
Okay, that's always a good thing.
It is.
Especially in a country like India.
With a large population.
With a growing population.
And their expansion plans are generating thousands of employment opportunities.
Wow.
Across various skill levels.
So it's not just
low-wage jobs.
Yeah, entry level.
They're creating opportunities across the spectrum.
Okay, so that's a significant boost
It is.
to the Indian economy.
Job creation is essential
Absolutely.
for driving economic growth.
And improving people's livelihoods. What else are they doing to give back to the community?
They're also investing in skill development programs.
Okay, so they're not just giving people jobs.
They're investing in
helping them develop skills that they can use
to advance their careers
in the future.
Long term.
This helps bridge the skills gap.
It does.
And empowers individuals to participate in India's economic transformation.
It's about empowering people.
So they're providing jobs and they're investing in people's long-term employability.
Exactly.
That's a very holistic approach to economic development.
Yeah.
I like that.
They're not just thinking about themselves.
Right.
They're thinking about the community.
What else?
And beyond their direct impact on employment, they're also contributing to the development of a robust manufacturing ecosystem in India.
Okay, how so?
By partnering with local suppliers and vendors.
Okay.
They're helping to strengthen the domestic supply chain.
All right, so they're helping other businesses grow.
They are.
As well.
And promote entrepreneurship.
It's a ripple effect.
It is a ripple effect.
Their success is creating opportunities
Good.
and benefits that extend far beyond their own operations.
Beyond their walls.
Contributing to the overall economic development of the country.
They're playing a key role
in
transforming India into a global manufacturing powerhouse.
So as we conclude our deep dive into the world of Dixon Technologies, we can say that they're not just a company with impressive numbers.
It's more than that.
They're a force for positive change in India.
They are.
Their story is a testament to the power of business to drive economic growth, create opportunities, and contribute to a better future.
I couldn't have said it better myself.
Okay, good. Yeah. It's really inspiring to see a company achieving financial success while also making a positive social impact.
It's the ideal scenario.
But let's not forget, we're here to help you understand what these numbers and trends mean for you.
For the listener.
For the listener, the person out there who's listening to this deep dive.
Right.
So beyond the impressive financials and the feel-good factor of job creation, what are the key takeaways our listeners should walk away with?
Okay, so firstly, Dixon's journey highlights the incredible potential of the Indian market.
We've talked about that.
We have.
But it bears repeating.
It does.
This isn't just about one company.
Right.
It's a sign of a larger economic transformation.
A larger trend.
Taking place.
Yes.
So an astute investor or business person might see this as a signal.
A signal.
To pay closer attention to India.
To India?
To India's manufacturing sector.
Absolutely.
Okay.
Dixon's success is riding a wave of factors.
Okay.
Favorable demographics, government support, a growing consumer base.
Things that aren't going away anytime soon?
Exactly. These trends are likely to continue for years to come.
So it's not just a flash in the pan.
It's not a fad.
This is something that has legs.
Long-term potential.
Okay, what else?
Secondly, Dixon's strategic decisions offer valuable lessons.
Okay.
Their focus on partnerships, both local and global, is a key ingredient in their success.
Yeah, it's interesting how they've managed to straddle both worlds.
It is.
Catering to the specific needs of the Indian market.
Yeah, they understand the local nuances.
Yeah.
But they also have that global perspective.
While also becoming a key player in global supply chains.
Exactly.
It's a model that could be applicable to other industries as well.
I think so.
It's not just about manufacturing. Right. It's about understanding.
It's about understanding your market.
That local market.
Yeah.
But also thinking globally.
Absolutely.
So understanding those local nuances while thinking globally.
Yeah.
That's a key takeaway.
I think so.
For anyone looking to navigate today's complex business landscape.
It's a globalized world.
It is.
But local expertise still matters.
It does a lot.
To us.
And finally, Dixon's story is a reminder that adaptability is crucial.
Oh, yeah. We've talked about that a lot.
We have.
The world is changing rapidly.
It is.
Driven by technology, geopolitics, evolving consumer demands.
It's a dynamic environment.
It is.
It's constantly in flux.
You got to be able to move with the times.
You do.
Like we talked about with their moves into the EV space.
Right.
That's a clear sign they're not content to rest on their laurels.
Yeah. They're forward-thinking.
They're looking for the next big thing.
Absolutely.
They're actively seeking out new opportunities and adapting to emerging trends.
Yeah, they're not afraid to take risks.
To take calculated risks.
Right.
Okay, so that's important.
I think so.
You can't be afraid to change.
To evolve.
To evolve.
To try new things.
To try new things.
Exactly. All right, I'm ready for the final thought.
Okay.
That one nugget of wisdom that our listener can take away.
Here's something to consider.
Yeah.
Dixon's success isn't just about making money. It's about creating value.
Creating value.
Value for their customers, their employees, their shareholders, and even for the larger community.
Yeah, that's a really important distinction.
It is.
It's not just about profit.
Right.
It's about making a positive impact.
It's about a holistic approach.
On the world around them.
Absolutely.
And in the long run, that's what truly sustainable success looks like.
I think you're right.
It's about finding that balance.
That balance.
Between financial performance and making a positive contribution to society.
Making the world a better place.
So as we conclude our deep dive into Dixon Technologies, we leave you with this challenge.
Okay.
Think about your own endeavors, whether it's your career, your investments, or your personal pursuits. And ask yourself, how can I create more value?
How can I make a difference?
How can I make a positive impact while also achieving my goals?
It's a question worth pondering.
It is.
And we hope Dixon's story inspires you to find your own answers.
And on that note, we'll wrap up this deep dive into Dixon Technologies.
It's been a pleasure.
Thanks for joining us.
Until next time.
We'll see you next time. For another fascinating exploration into the world of business and finance.